Hi, this is business broker John Diaz. I'm going to be going over how to value a landscape company. A quick background on myself. I'm an experienced business broker. I'm part of Business Brokers of Florida. I'm part of International Business Broker Association, the Regional Commercial Alliance. I'm a accredited business broker. My prior experience is I ran a $1 billion branch for Ford Motor Credit Company, and I was in charge of multi-million dollars mergers and acquisitions for Ford and non-Ford dealerships. One of the first things we do as a business broker is to look at the valuation methods. The first one is the asset approach, and that's looking at the value of the assets. This is used a lot when a business, sometimes a restaurant, for example, is not making money and they're selling the lease and the assets. The second one is the market approach. We're going to look at all the other businesses that have sold in the area or in Florida, look at them by similar businesses to yours and your industry, and look at what they sold based on the discretionary earnings and EBITDA. And the third one is, the income approach. People are looking for future cash flow. That's one of the biggest things a buyer's looking for when they're buying a business. We're going to be gathering the financial data and then analyzing the financial performance. Discretionary earnings, seller discretionary earnings, the formula is the net income, and then there's adjustments of minus interest expense, depreciation, amortization, to owner salaries. There's adjustment for non-reoccurring expenses, and then that gives us a bottom line of the seller discretionary earnings. That is then used as a multiple. For example, it could be 2-3 times that. It varies by industry, and we would also look at the market approach to other ones that have sold in your industry. The STE is really the benefit the next buyer is going to get, assuming they're probably an owner-operator. For bigger deals over $1 million, then EBITDA is used. EBITDA is basically taken out to owner's salary, assuming that a bigger company is going to have to hire a manager. We're going to be looking at the market approach. What we're looking at here is the database of the Business Brokers of Florida's MLS. This shows us all the similar businesses in your industry that have sold and the average multiple that it sold at. We also have some other databases that we use, and then we look at all of them combined to determine the best multiple for your business and then derive what is the recommended sale price for your business. Some rule of thumb for selling a landscape business is that it's common that there's 1099 and maybe cash employees versus W-2 employees. And that can be an issue, especially for larger deals. And it's an issue for SBA finance as well. Route density is also something that's taken into account. If the routes are closer, there's efficiencies in fuel cost that can bump up the multiple and the value. Also for sales, it's usually cost of goods, it's usually 15 to 30%. And labor costs should be around 25% overall. Rent usually is 1 or 3%. And you look, there's some very well-run landscape businesses that are home-based businesses. So that's kind of a ballpark. You don't need anything fancy. Sometimes they can do a $400,000 or $500,000 warehouse. As well. And then also seller financing is common. Just a low benchmark could be that, you finance the amount of the equipment. We're going to work on getting your business approved for an SBA loan. That opens up to a lot more buyers. If a buyer comes in and put 10 or 20% down as an example, and then pay the debt service, the payment for that loan, and still make money on the business, it opens it up to a lot more buyers. Documents required to get qualified and to get your business analyzed for a free business valuation are the last 3 years of tax returns. Also the same for profit and loss, balance sheets, any accounts receivables and accounts payable reports. And from there, we'll just derive the discretionary earnings or the EBITDA. As a business broker, when we're dealing with buyers and sellers, we do what's called the buyer sanity test. As an example, if someone's buying $1 million business, they're putting 30% down. They're going to finance the rest. Those payments could be at 9 or 10%. If that payment, for example, is $30,000 a month, and the business is only making $35,000 a month, and that there's not enough income. If the business is making 40, 50, 60 grand, then there's the income for it to be attractive to the buyer to come in, make the investment, do the work, pay the loan, and still have a profit and a salary left over after. Seller financing. If you want to increase the chances of selling your business, you need to be open to seller financing. That helps sell the business. A lot of times also you could maybe improve the rate. It also helps sell. I recently saw one business where they financed 80% of the business because they had a first position versus a second position if they'd had an SBA loan, and the seller wanted the income. It was more interest than he was going to get in his retirement accounts. In some of the higher price deals we're seeing where there are 5% earnouts and 5% retained equity, so the sellers are getting around 90% of the value and the rest in earnouts and retained equity. We're going to have to be able to answer the buyer's questions. One of the main ones is, how do we get to the price? We have to solidify the price. They're going to know why you want to sell. From a buyer's perspective, they're looking to see if they can duplicate the results after the sale. Is it dependable? And, is everything documented? And then, is the discretionary earnings and the lifestyle desirable for what they want? We need to know the buyer and where they're coming from. Is it a first-time home buyer? Is it a serial entrepreneur that's bought many businesses? Is it a venture capital? Is it a strategic purchase that needs it and may be willing to pay a little bit more? Is it someone looking to get an E2 visa and come into the United States? Those are things we're going to have to identify and then target our marketing around to find that buyer. What is the average time to sell and close? It takes around 6 to 7 months to find a buyer, and then the due diligence where they verify everything and get the closing could be 60 to 120 days. So the whole thing should be around 9 months. Want to sell your business, you need to do these 6 things. First of all is continue to run your business and work on increasing the profits. Don't cut anything back. Keep making money and increase your profit. The second one is consistent income and documenting it. It's appealing to have a higher profit margin, so work on those profit margins. Also, a strong customer base and document your customer base. Any major contracts will help, and keep your accounting clean. Buyers don't pay for potential. They want current income, and they want to be able to know that they're going to be able to transfer that income when they take over. One of the biggest things you can do is make the business not to revolve around you, make the brand not around you. That is one of the biggest things that will increase the value. One of the questions I ask is, can you take a month off? If you can take a month off and your business runs smoothly, you're on your way to increasing the value of your business. Here are some examples of equipment lists, client lists. Is there a concentration of clients? There may be, we may need accounts receivables as it moves forward. Things that make your business not sellable or less sellable are having back books or no records. If the business is not making money, if the owner is everything and you can't leave for one day, if the business has one customer or only a few, if the business owner is a mess as far as operationally and organized, or if you're just winding out the business, then there's really nothing there. Reasons why you should use a business broker. First one is expertise and market knowledge. The second one is our extensive network through the BBF and IBBA and other memberships in certain industries. We're also going to handle the confidentiality and privacy, our negotiating skills, uncovering the value of your unique value proposition during this process. And time is a resource. You already have a job running your business, trying to get the profits up while we're selling. It's a full-time job to sell the business. We're also going to oversee the due diligence and get you to the closing table. Give us a call at 844-456-4647 or visit our website, kwbusinesssales.com.